Safely. Welcome to our Sunday Night Trading Safely Masterminds weekend webinar. Glad you can join us. Thanks for coming in from wherever you are. I'm in Sydney, Australia at the moment, and I've got Sean Downey with me at the moment. Unfortunately, we've got some technical problems at the moment. I've got Sean Downey over in the UK. He's world-renowned technical analyst. Tonight we're going to go through some global markets. In the meantime, we are going to try to resolve the technical problems we've got at the moment. Don't you love it? A bit of live difficulties, but anyway, we'll persevere. So right now I can't hear Sean in the UK. But so tonight, guys, we're going to go through global markets. We're going to have a deep dive into a new technical indicator that we've developed. And I know during the week, our clients, we mentioned that we were going to spend a little bit of time on the webinar this week going through application of that new indicator. It's really powerful. It uses multiple time frames. And it is a welcome arsenal to the tool of studies that we've developed to date. So I think the format tonight, it's probably going to be 45 minutes or so. Like I said, unfortunately, I can't hear Sean at the moment, which is a bit of a loss, but we're going to go on anyway. So I might just share screens, first of all. And just wanted to talk to you about this webinar. So tonight, really, this webinar is for you if you are committed to changing your financial future. Like if you're not and you're on board right now and you're watching this, now's probably a good time to, if you're not committed, now's probably a good time to turn your screen off, because we are interested in people that really do want to make a change to their future and that they're committed to putting in the hours and really learning. This webinar is for you if you're sick and tired of trading indicators that don't work and that usually lose your money. I know in my experience, I've been a professional trader for 15 years. I've seen every indicator under the sun, and they promise a lot, and there's not many that actually deliver. Tonight is also for you if you want to get expert opinion on global markets. We're going to cover off on shares, currencies, bonds, and commodities. That would have been really key to get Sean's outlook on the markets, but we'll resolve this technical problem for next time. Also, this webinar is for you if you want to get an unfair advantage over almost every other investor out there. And the reason I say that is because the tools that we employ, because we look across time frames, we have some very, very powerful tools that will help you, as you'll see tonight. Also, if you want your questions answered about certain markets, please just jump on the chat box. If you want to understand what's happening in a particular market, we're more than happy to have a quick look at it for you and analyze it in front of the audience tonight. Finally, you're going to see cutting-edge trading technology in action. And this webinar is also for you if you're an experienced trader who just wants to find a way to, supercharge your investing and learn a few different techniques. You've come to the right place. And finally, this is a big deal. If you want to learn how you can become one of our lucky 10 people that we'll work with over the next month, we're going to give you, out a free trial to our software and our indicators and system, online coaching, and access to our online community for 30 days. So that's up for grabs tonight if you stick around till the end of the webinar. First of all, why should you listen to Sean and I? Normally at this point I let Sean talk, but Sean's won the 2014 Technical Analysis Book of the Year. He's traded for, I think it's 37 years now, pretty much across every market that you can trade. Bonds, commodities, the list goes on. He's obviously spent a long time developing software, and he's semi-retired and lives in the UK and is very well known in the technical analysis field. And for myself, I've been a professional trader for 15 years. I worked at Optiv Australia. I made over $100 million for them trading. I've also been working on software with Sean for the last sort of four to 5 years. And I spend a lot of my time up at Port Stephens in New South Wales, Australia. So next thing to just cover off on is our general information and disclaimer. So if you wouldn't mind just flicking through this statement, it's pretty important. So it's been a crazy 6 to 8 weeks. Equities have been in a sideways range, well, essentially since the early part of December. It's been treading water, so to speak. We've been watching it for a long time, and we've mentioned to our subscribers that, you know, sometimes when the market goes sideways, we don't get a lot of signals and we're forced to wait, and that's certainly been the case. Unfortunately, there's been some other markets that we've been able to analyse along the way. In particular, gold's been pushing up, but we're going to cover off on all of these markets and where we think they're going longer term in a little while. So I might just move off this disclaimer and jump back onto CQG. So I think first of all, we might do a quick wrap up of you know, where the markets ended up this week and where we think they're going in the week ahead. So first of all, I might just go to the Dow Jones Industrials average. Been sideways for a long time, as we mentioned, and through the week, this week, it's finally managed to break a bit higher. We mentioned at the end of the webinar last weekend, well, you know, if the Dow Jones could start moving above that 20,225 area, it's certainly opening up the potential for a move higher. Is coming into some resistance around this 20,400 level. There's a couple of time frames in here that will act as resistance in the short time. So in the shorter term, in this zone here between 20,370 and 20,450, there'll be some initial resistance. But the market certainly closed the week last week above that weekly yellow upper pivot there. It's indicating that the market has a bullish bias. At the moment, we don't see any reason to be negative on the Dow or equities in general until we would close back under the lower weekly pivot there. But it's interesting when you look around at some of the other indexes, you do get a slightly different flavour. Going to move to say that S&P 500 futures, they're all at varying degrees of they seem to be telling slightly different stories. You know, the E-mini S&P 500 closed last year pretty bullish. Has been in a long sideways pattern, as you can see. Just this week, actually, did fail to close above the first up, so there's some question mark there on the S&P. If we look at the Russell, which is the smaller caps, the Russell is still effectively trapped sideways. Period. Hasn't been able to break high yet, unlike the Dow, and he's still well below some of these monthly and weekly levels. So really the Dow seems to be the strongest of the markets at the moment. If we have a look at the NASDAQ, okay, the NASDAQ is also strong at the minute, closing above this weekly level at the end of last week. So I might just revert back to the Dow. Let's have a further look at that. If we look at it on a weekly basis, I think during the week we mentioned, well, at the bare minimum, we'd like to see the Dow Jones over 20,225 for it to remain strong. I just want to draw in some trend lines from the weekly time frame. Just to put it in context. Okay, so we spent effectively, we spent most of January actually just bumping up against this weekly trend line. And last week we've had a clear break above it. So coming into the next week, okay, still bullish. No reason not to be bullish. We had a couple of daily buy signals down here along the way. Is coming into some resistance around this 20,450 level, so no reason to have changed our tune there at all on Dow Jones. Normally this time I'd probably defer to Sean and we would have a chat about the sectors and how those sectors are performing. For instance, steel was the big mover this week. It was up from position sort of 45 all the way up to 6. And normally Sean would talk to the rotation of sectors, but in his absence, I might just continue to dig through some of the other markets that we typically refer to each week. And then indeed I want to have a deep dive into one of these new technical indicators that I mentioned that we're pretty excited about. In fact, I might even just get into it now. So I might call up silver. I'm pretty excited about this development. The study is based off range deviation pivots. That's something that Sean developed. And what we've done is take it to the next level. And sorry guys, I'm just setting the study up. Just bear with me for a second. I'll just replicate this. So what we've done is we've created a new study that's going to let us analyze markets from a multiple time frame perspective, and it's based off the range deviation pivots. So before we go any further, I'm just going to explain to you what range deviation pivots are. Effectively what they are, there's 3 pivots up. So there's a white, blue and dark blue, and there's 3 pivots down. So the white lower one, and then the brown and red. And the pivots are based around the opening price. So at the start of each bar, and it doesn't matter which time frame you're looking at, you're going to get 3 pivots up and 3 pivots down. So here I'll just illustrate what those are. So there's the 3 pivots up there, and then we have 3 pivots down here. Okay, now this is just looking at one time frame. And what I want you to notice is that when a market is in an uptrend, the market won't close below the lower white band. So if you look at this whole move higher here, there was no occasion where the market closed below this white band. Indeed, when we look at the first pivot up, we see the market closing above it on numerous occasions in this uptrend. It did it here, it did it here, and it did it here. So the point I'm trying to communicate to you is that when the market is trending up, it will take out and close above these upper pivots, the upper white pivot, on a frequent basis, and it won't close below the lower white pivot. Okay, so and when you expand that concept into multiple time frames, you can come to some really, really powerful conclusions about what a market is doing across time. So if I just add these pivots back, but now all I've done is I've taken out the second and third pivot. So now we've just got a pivot up and a pivot down and the opening pivot, which is in the middle. And like I said, when the market is moving higher, it will not close below the lower pivot, but will have a tendency to close above the upper pivots like it did on this occasion and here and here. So when we do this, when we apply that same concept to different time frames, then we get a picture that looks something like this. And I might just change this back to a daily chart, so it's not so messy. Okay, now all these colors represent different time frames, and we've had a few requests from our subscribers through the week on how to interpret this new study that's become available in ChartIQ. But for now, I just want to explain what the pivots are. So the green pivots up and down a daily time frame. The yellow pivots up and down are the weekly time frame. So that's these ones here. And then you have monthly pivots, which are the pink ones, up and down. And then quarterly pivots, up and down. Semi-annual is blue and orange is the annual pivot. So there's really three key things that I want everyone to understand tonight. For all our subscribers, you've got access to this in ChartIQ now. The study is called Range Relativity. And the key points are as follows. Number one, we want to understand where the market closes in each time frame relative to the pivots of that time frame. So if I'm looking at the weekly level, which is those yellow bands up and down, for the market to keep having an upward bias, then at the end of the week, I would expect that the market would continue to close above the yellow level. So that would be a situation like that. Or at the end of, where else did it happen? Here, at the end of that week, it closed bullish. At the end of last week, it closed bullish. But notice how at the same time, in this uptrend, despite the fact that we were closing the end of the week on several occasions above the upper yellow pivot, we never closed below the down one. Okay, so until that happens, that time frame can be thought of as being bullish or having an upward bias. Now the trick is to apply that concept across each time frame. So right then we just looked at the weekly pivots. Well, now what I want you to do is think about the same thing, but using the annual time frame. So we can see here there's the upper pivot at the top and the lower pivot at the bottom. And I'm just going to change the time frame here into half day so we can dig a bit deeper. So make this a half day chart of silver. And we go back to the end of the year, and there's our two orange pivots again. Right at the end of the year, silver closed underneath the upper pivot. So that means it closed neutral because it was between the two bands. Okay. So from an annual time frame perspective, silver presented itself as being neutral at the end of 2016. Now, if we go through that same process for each time frame, it's going to tell you a story. And the story is, well, depending on where we close against each time frame, then that is the bias that is going to present itself in the market. And the higher the time frame, then the more powerful is the influence over the market. So if we look at, say, silver at the end of the year, I'm just trying to find this other quarterly level. Where is it? Oh, it must be underneath. Anyway, so at the end of 2016, this I think is the, oh, there it is there, okay. So there's the upper quarterly pivot, there's the lower quarterly pivot, and at the end of the year we closed underneath the quarterly pivot. So that tells us we have a bearish bias for silver at the quarterly level, or a tendency for it to want to go down. Now, at the monthly level, when we zoom into the monthly level, we can see the end of the year closed in between the two monthly levels, up and down. So we had a neutral bias for the month. And then if we drop into the yellow, which is the weekly levels, at the end of the week, we ended up in between, so we were neutral. Okay, so where we close against each time frame determines the bias. If you're above the upper pivot, it's bullish. If you're in the middle of the two pivots, you're neutral. And if you close underneath the lower pivot, then you have a bearish or a downwards bias. So to summarize for silver at the end of last year, we're in the middle of the annual pivots. So we are neutral on the yearly basis, but on the quarterly brown pivot, we closed underneath it. So we're bearish on the quarterly basis. And on the monthly pivots, which are the two pink ones, we ended the year up in the middle. So we had a neutral bias there. So overall, silver, as of the 31st of December 2016, was telling you that it was neutral at the yearly and the monthly basis, but the quarterly level was bearish. Now, step two in all of this is, well, okay, that's fine. Understand which time frames are bearish or bullish depending on where they close. But I want to introduce step two, which is, well, the concept of, is a market overbought or is it oversold? Okay, and we do that using this study by looking at the relationship between the lines and between time. And this is really critical because, for instance, at the start of 2017, see that the two weekly pivots here are inside the monthly pivot. So that tells you that the market is in a neutral bias. What I'm interested in is when the pivots move outside. Okay, so here, for example, see how the two lower weekly pivots move underneath the monthly pivot. Prior to that, the pivots had been inside, or except over here when it was overbought, the upper pivot was above the monthly pivot. So step two, guys, is when the pivot in one time frame moves outside the next higher time frame pivot, it's warning you that the market is potentially overbought or oversold depending on the relationship. So in this instance here, where the weekly lower pivots in yellow were below the monthly lower pivot, it's suggesting that the market might be oversold. Okay, and similarly up the top here, where you see this weekly yellow pivot above the monthly pivot, is suggesting that the market might be overbought. Okay, but markets are fractal and they will do the same thing in every time frame. So just as this weekly pivot here above the monthly pivot was suggesting that, well, okay, that combination of time frames, that's overbought, the same thing can happen between monthly and quarterly. For instance, you can see here that this lower monthly pivot was below the two quarterly pivots. So it's suggesting at the monthly to quarterly time frame that the market was oversold. And hence, that's why we got such a big corrective move up here in silver. Okay? So step one, just to repeat, involves looking at where we close the end of each period. So at the end of the day, the end of the week, the end of the month, the end of the quarter, relative to the upper and lower pivots to determine the bias of the move. Step two, work out whether the market is overbought or oversold in that time frame by looking at the relationship between the pivots. So are the pivots inside, are the weekly pivots inside the monthly pivots, or are they outside? If they're outside, then the market will be overbought or oversold. Similarly, you want to look at the relationship between the monthly pivots to the quarterly pivots. if the monthly pivots are inside the quarterly pivots, then the market's probably got a neutral bias. So the 2 monthly pivots, or the lower one was underneath the quarterly, so oversold. And when we look to today for silver, for example, what we saw at the low, which is the lower monthly pivot below the lower quarterly pivot, indicating potential oversold, well, it's now reversed. You've got the upper monthly pivot above the quarterly pivot, suggesting that, well, you better be careful about this market because it's moved into a potential overbought state. And don't forget, the higher time frame trend is always determined by the higher time frames. And what do we know? Well, we closed the end of last quarter underneath the lower pivot, so it's got a bearish bias. So we've got a bearish bias for silver in the longer term, and it's moving into a potential overbought state. Now, we're never going to tell a market what to do. In the shorter term, like if we go back to these weekly levels in yellow, the market's still strong. You can see last week we closed above the weekly level. In yellow, there's no reason to be selling silver in the short term. But the high time frames are warning you that there is potential for it to start turning down. But you will be able to work that out every step of the way by watching where the market closes in relation to each of the pivots. So when we get to Monday, we're likely to open up around here, and we're going to have 2 new pivots automatically calculated for us, one up there and one down here. If the market can't close above this upper pivot for silver next week, well, you'd want to be paying attention because this overextended state exists now. The monthly upper pivot is above the quarterly, and that only happens when it's overextended. So it's really critical to, if you want to get a really good handle of what each time frame is doing and what's driving a trend, this is a very powerful way of doing it. Now, if we go to, say, gold and do the same analysis, at the end of 2017, gold actually closed in the middle of the 2 yearly pivots, so it has a neutral bias. When we look at the quarterly pivots, there's the upper pivot here and the lower pivot here. Gold closed under the lower pivot, so it's got a bearish bias as well. It has a tendency to want to go down at the quarterly level. At the monthly level, well, we closed the year in between, so it's neutral. Now, when we look at the relationship between the pivots, you can see up here that the 2 monthly pivots were in between the quarterly pivots, so the market was neutral. But down here at the low, both of these monthly pivots in pink were below the quarterly, telling you that the market is, potentially heavily oversold. Not only that, but here again, we have the weekly lower pivots below the monthly lower pivot, telling you that this is oversold on the weekly to monthly time frame and the monthly to quarterly time frame. That's why we got such a big reaction up. So right now for gold, when we analyze it from the low, we were oversold. The weekly lower pivot was below the monthly. We've been closing above the weekly pivot at the end of each week. We didn't here, and that caused a short-term pullback. But then we closed above the monthly pivot at the end of the month, so that kept the upward momentum going. And so right now, last week, we closed the market underneath. So at the weekly time frame, there's some lack of strength beginning to appear. Not only that, but now the monthly upper pivot is above the quarterly upper pivot. So you've got a couple of things there telling you watch out for gold. One is we closed last year under the quarterly. 2 is the monthly upper pivot is above the quarterly, so there's an potentially overbought state. And now we couldn't close above the upper weekly pivot in yellow. So gold, although it's still strong at the monthly level because we closed above the monthly upper pivot, now there's some warning signs that you need to need to be careful about holding gold going forward, because it's coming into an overbought state using the higher time frames. And you can continue this analysis for each market. It tells you the same story. So understanding, well, what's the higher time frame doing, and then looking at the close of each of the pivots in relation. Looking at the close of each time frame in relation to those pivots. Now, fortunately, we've had this study introduced into CQG, sorry, not CQG, into Chart IQ. We've got a chart here of daily chart that's spot silver. So the study is this one here. It's range relativity, and when we open it up, what it shows is all the different time frames it references. I've got the daily turned off at the moment, so the shortest time frame is weekly. But you know, with silver, you can tell the same story that I just did in CQG. But at the end of the year, where did the market close in relation to the annual pivots? So there's the upper annual pivot, there's the lower one. Well, the market closed under it, so it's kind of neutral. But then at the quarterly level, well, the quarterly pivots are the purple ones, so it closed under, so it's got a quarterly bearish bias. It's the same story, guys. So right now, these monthly pivots in red, the upper pivot is above the quarterly pivot. So when you get pivots from one time frame moving outside the pivot of the next time frame, it means the market's getting overcooked. So time to pay attention. If the monthly time frame's extended, then you want to be keeping an eye on the weekly time frame to see that the upward momentum is being maintained. Now, in the case of silver, we can see last week it closed over this upper green pivot, so it's telling you there's no reason to be looking to. There's no weakness apparent yet for silver. You know, we'd like to see it turn back down and close under a lower pivot for that to be the case, but it's not, so it's still strong. I think another one, Japanese yen's probably another good example. And don't forget, guys, that we can combine this analysis with all of our traditional support and resistance studies that are available in the Trade Safely package, and we'll get to that in a little bit. I just wanted to do a little session on this new study so that you get a handle for it. It's probably worth saying at this point that you know, to get annual pivots and semi-annual pivots, it takes a lot of data, and not every stock, not every market is going to give you, you know, 25 years of data. You know, it may be that you only end up with monthly and, you know, weekly pivots for many markets, but it's important to understand that if that's the case, then you don't have the same history to look back on it. And if you can't tell what the high time frames are doing, then it's better to focus on markets that do give you enough history if you're trying to derive a story like we have been using these pivots. I'll just move to yen. So yen US dollar. So yeah, yen US dollar.
Just checking whether you can hear me now.
That's JPY USD. Okay. Okay, so right now for the yen US dollar, what was interesting was, you know, this week, this monthly upper pivot up here for the first time moved above this purple quarterly pivot. So that's a warning sign that the yen was overbought. It's clearly in a broader downtrend. So we're waiting for something like this to give us an opportunity to sell into. If I come into CQG, there's a bit more data available. We'll see what it looks like. Okay, so yeah, so with yen, we closed end of 2017 under that quarterly level. So it's telling you it's bearish at the higher time frame. It was oversold at the low. You can see the 2 weekly lower pivots there below the monthly in pink. That's created this counter trend rally, but now we've got the opposite scenario happening where the monthly upper pivot is above the quarterly pivot. So, and the market could not close above that upper weekly pivot in yellow at the end of the week. So, guys, what can't go up must go down. Having said that, I can also notice that the yen actually didn't close the week under that lower weekly pivot. So, in actual fact, the yen closed sort of neutral last week. But bigger picture, the monthly upper pivot is above the quarterly, so it's overextended, and we know that last year it closed below the quarterly lower pivot. So, and look, the final bit of the puzzle when we analyse markets this way is to add in our buy and sell signals, because without those, we don't really want to act. And that is a very powerful tool to effectively make you wait until you get a signal. So the sell signals are those little red dots, and we won't act until we, at the minimum, get one of those little dots in combination with an overbought or oversold scenario. So look, for yen at the moment, it is threatening to go lower. The sell signal is in place. It would have been good to see it close the week under this lower pivot. That didn't happen. So the sell signal is still valid. It is overbought in the monthly to quarterly time frame. Probably expecting that one to continue down further. If we look at, say, the euro now, actually, there's one other thing I want to show you. If we combine these pivots with support and resistance, then it becomes additionally powerful. So, okay, so this blue line here is a weekly resistance level, and we had the very powerful combination of a sell signal, the red dot, with a resistance level at 89.75. On top of that, we had this overbought scenario using these time pivots. So the fact that that upper monthly pivot was above this quarterly pivot told me that the monthly quarterly time frame, it was overbought. So when you put all that information together, guys, you've got a very, very strong case for the yen to be going lower. And the only thing now that would make me think that I'm wrong is if next week the market was to start closing back above the weekly upper pivot, or this yellow dash line. So that's the yen. What else can we look at? Yeah, the euro. I guess it's fair to say we have been sort of talking a fair bit about currencies and commodities as a substitute for equities, because equities have been, sideways now for quite some time. That seems to be changing, guys. So hopefully we get a lot more signals in the period ahead. So now I just want to run through the same pivot analysis on the euro, just so you guys can get used to applying this analysis the same way if you want. So at the end of 2017, you can see that at the bottom there, there's the lower quarterly pivot. Here, you can see that the market closed underneath it. So the euro has a quarterly bearish bias. At the low here at the end of 2016, you can see the 2 monthly pivots were below the quarterly. That tells you that the market was oversold. Also, the weekly lower pivot is below the monthly lower pivot. So the market was oversold from week to month and month to quarter. That is what has caused this upward reaction. And the thing to remember is that the higher time frame is still bearish because we closed under the quarterly lower pivot. So moving ahead to the most recent high, we went from oversold to overbought because this monthly upper pivot was above the quarterly pivot. So that was a warning there that that time frame was overbought. And don't forget, the highest time frame is bearish. Indeed, the euro has closed the week under the weekly lower pivot. So the euro is just outright bearish at the moment. It's closed poorly. The next step of bearishness for the euro will be end of the month. So at the end of February, it closes below this monthly lower pivot at 105.89. Then you're going to have the monthly time frame also suggesting that the euro is bearish. And don't forget, once again, that the quarterly time frame is driving this lower at the moment. So euro still bearish, looking for a close now under this monthly pivot at 105.89 to keep the market bearish at that time frame. We move on to dollar index. That's just the opposite of that. Dollar index is a basket of US dollar pairs in various
Can you hear me now?
proportions. It's effectively telling you the opposite story of the euro. So at the end of the last year, the dollar index actually closed under the two, or between the 2 yearly pivots in orange. So that meant that the market was neutral. Having said that, when you look at the quarterly levels, there's the upper quarterly pivot, there's the upper semi-annual pivot. So bigger picture, guys, dollar index still bullish. In the short term here, for the first time in 1, 2, 3, 4, 5, 6 weeks, we closed last week above the upper weekly pivot. That is a change of sentiment for sure. And at the same time, look what was happening. The lower monthly pivot was below the lower quarterly pivot, telling you it was oversold. So guys, looks like dollar index might be resuming its upward trend at the moment. For me, to be wrong now, I would need to see a close below the lower pivots. Sean, I can't hear you at the moment, but can you hear me?
Yeah, I can hear you, and so can everyone else.
So, guys, we've got an interesting situation where people can hear Sean, but I can't hear Sean. So I'm just going to keep talking. Apologies. So, look, guys, the dollar index seems to be turning back up, is what this is telling me. If we look at, what else can we look at? Let's look at oil from the same perspective. Okay, we've been bullish oil for a long time. I'll tell you what I do. Everyone can hear Sean. So what I'm going to do is I'm going to finish off on what I'm saying, and then I'm going to make Sean presenter and he can talk. So just bear with me for a little bit longer, and then I'll hand this presentation over to Sean. So with oil, actually just let me check this continuation. Daily. Oil's been interesting because it had a, when we look at the pivots with oil, okay, there's our 2 pivots, upper yearly pivot, lower yearly pivot. Oil actually closed above the upper yearly pivot, so it's got a long-term bullish bias. It closed above the quarterly upper pivot. So all the higher time frames are saying that oil should be going higher. And notice how over the last 2 months, the market's not been able to get anywhere near the lower monthly pivot. So there's more evidence that oil wants to go up. If we look at the end of every week, look at the end of every yellow week, the market oil has never closed under it, under the lower pivot at the end of the week. So there's just more evidence mounting that oil wants to go up, guys. So the first clue from here is going to be a close above the upper weekly pivot. Okay, so oil, no change there. We think it's going higher. I might just hand over to Sean now. So just bear with me.
Okay.
Sorry about the technical difficulties tonight, but I'm just going to hand this over to Sean. Sean, over to you. You're presenting to everyone.
Okay, thanks, Jez. Bit of a very weird problem. My computer did blow up on Sunday, and I didn't get it back till Wednesday, so maybe that's got something to do with it. I'll do some troubleshooting. Just for me, want to concentrate on stocks and what actually came out in that area, and it was actually to do with sectors primarily, and hopefully people can, just going to maximize this and show the Market Smith software. And it's really the thing that I'm always interested in is what's at the bottom and what's at the top. And what came out of this week was the fact that at the bottom, apparel and clothing, which has been at 197 for a while, jumped last week. It's only at 193, so it hasn't jumped a huge amount. But the reason that it went higher was because of a stock called DEC, and that had some good results. And basically, if I do a daily chart, it's not the ideal software to show. You can see that in the left-hand side there, we suddenly went up on the Wednesday, and that dragged everything else lower. The ones that I'm particularly interested in is a stock called Cato, which is C-A-T-O, and that came down to the bottom of its range. It's been performing pretty poorly, and that got a lift based on DEC. So interested in there. So apparel is starting to come alive. I'd like to see some of the other results get out of the way, and then ideally what I'd like to see is a pullback, come back down to supports, and then we get another set of buy signals. If someone was very aggressive, they could have used things like time continuation or pops, but unfortunately not most of them were not at supports. So I want the time area study to go underneath those prices, and then we can get involved. The second area was oil and gas. We know the story on oil. It's been something we're very bullish on, and oil and gas has sort of been loved a little bit in recent weeks, and so is in the top 20. Oil and gas royalties are in at number 5. So again, looking for some pullback in some oil stocks, and then looking to get involved there. The big mover was steel producers, which moved from number 45 all the way up to number 6. Now, steel producers has been number 1 in the past. I think I talked about US Steel in a previous hangout, and X was all the way down at $7-8, having come from 80 or 90, became loved, and it's already rallied nearly 400% up into the high 30s. So for me, people are coming to the party very, very late in the. So I like the idea that steel is coming back up to the top when something's already gone up by 400%, and there's plenty of examples of stocks that have done that. So if I was to look at the chart itself, we're coming up towards some previous resistances. The reason why steel got such a boost was the biggest stock in the sector, which is called MT. its results came out and it rallied pretty strongly. So it had a bit of a skew. You can see that there was a gap higher on Friday, and it's come up towards the previous high. So steel is definitely something I'm interested in. A little bit like financials. We know from the earnings season from a few weeks ago that it sort of didn't matter what the results were. Everyone was already long. And so even when there was good results, stocks didn't necessarily go higher. Goldman Sachs went down. And anything that missed, like NTRS, got punished. So we're in a similar scenario there. As far as the market goes, Nasdaq's powering ahead. S&P is sort of breaking up, but the Russell, which is the smaller area of the markets, the Russell 2000, is actually going sideways. It's not going up at all. So at the moment, the rally is being led by very, very big stocks. So things like Apple have been very strong. And that's what's leading the market higher. So I'll just minimize that. I'll put it back to you, Jess, even though you can't hear me. Share the screen. Joys of technology. No, it won't let me unshare. That's really good. Let's try that here. Boy. Not sure what's happened to Jez, so I better carry on talking because I can see he's not at his chair. Just some things looking ahead to next week. Earnings season is pretty much finished, so there's very little that's likely to make the market to move as such. So
Okay,
you don't have to worry.
I think I've got the screen again. Hi guys, it's back again. Sean's finished now, so sorry about the lack of communication there, or sorry, the breakdown in communication. We'll try and rectify that for next week. Look, if you do want to get involved, there is a link in the chat box. You know, there's a 30-day free trial available. There's only going to be 10 spots available. So what you get in that is access to the software that you can see. There's a suite of code and the system. There's an online community where you can put questions and we can answer them, and there's interaction, and we give updates on markets in real time. We'll also offer you a couple of one-on-one Skype sessions, so you can answer all your questions and teach you how to use the system. So yeah, there's 10 spots available. Make sure you get in touch with us to be one of those lucky people. So guys, sorry about that issue tonight. We'll try and rectify that for next week, and look forward to chatting to all the subscribers in the online community this week. So have a great week, everyone, and that's it for our Sunday night webinar. Talk to you next week.